You can kick rocks if you don't like how I talk. I'm gonna keep on talking and walk my walk. Ain't
I think the best thing to do is just like follow Google's example when they started. They only did an A round and then they never raised money again.
Lord.
And I could be misspeaking, but this is according to the autobiography that I listened to the other day on the company. But it's like cash flow as much as possible, because if you cash flow, you have control. You know that your company's alive, and you're not focused on essentially like, oh, what do I need to do to raise more money to keep my company alive? Default alive by having cash flow is the best business model.
All right, welcome back to Shift Happens, where we talk about all the shift that happens behind the shift, driving the future for businesses. I'm Preston with SONIQCX. We have Justin with SONIQCX and Jaden Lynn, Finance Bro.
Finance bro.
Love it.
All right. Well,
Awkward pause,
and
bro.
this
Come on.
podcast, it's
Yeah,
podcast number 4. It's all good. Podcast number 4, right? Episode 4, episode 5.
Yeah, it's 4.
So we'll be
4, I
diving
think.
in hopefully a little bit more into investments, intelligent scaling. Maybe Jaden will give us some insights on how to save us some money as the year comes to a close. Who knows? Maybe we'll be able to squeeze some secrets out of it.
I'm really only good at spending money, so I guess we'll see.
That's pretty much what it feels like here as a startup as well.
Well, so Jaden, you want to introduce yourself, brother?
Yeah,
Give
I'll
a
go
little
and
rundown.
introduce myself. Yeah, so Press and Justin, you both know me, but for any listeners, so my background, I'm here in Utah, originally from Iowa, very fun. Used to be a farm boy, every summer out on the farm, and then moved out here with my mom and family and stuff when I was a kid. Ended up going to university out here where I ended up running a student-led venture fund, UVU. So did that for about 2.5 years, made some investments, really got me into finance. I was going to go into biochemical engineering, and then realized I'd still be in school today doing that. So decided to just invest in cool companies instead of try to make compounds and then raise money from the government for the rest of my life. So yeah, that kind of kicked me off. Went and did corporate venture consulting out of Chicago with one of my mentors out of college, and then from there made some investments and ran some investment programs, some accelerator programs for mostly clean technology for AWS and Exelon, along with my mentor and the team there. And then started working with a group called Velvet. Traveled all over the place, 9 months during the crypto boom of 2020, 2021.
Did you boom with the crypto boom?
Oh, I went and boom with the crypto boom. That was during the NFT craze, and there was a not investment advice, investing into NFTs. Take it from me. So, hopefully that doesn't ruin my credibility on with you guys and with the show.
It makes
But
you more relatable, dude.
yeah, I know, right? Yeah, turns out a lot of those were utility tokens, but actually equity based, and that's a no-go. So, anywho, worked with family offices. Long story short, ended up starting my own private credit fund with a partner. And now still working with family offices in the investment world, doing private credit, and then always working on other ventures as well in the side. So a little bit about me. So kind of like to play in the equity space, credit space, working on some things in the commodity space, because I'm still young. I'm 29, right? So trying to build out my portfolio and my balanced portfolio while I'm young. So.
I didn't know you grew up in a small town. And did you hunt? Do you still hunt, fish?
Oh yeah, hunted all the time in Iowa. Hunt out here in Utah too. So we always in Iowa you have shotgun season, so it's whitetail out there. So every winter, my dad and my brother would go hunting, and it's a lot easier out there than here in Utah. So rifle hunting in Utah is kind of tough. There's people dressed as pumpkins all over the place, and
the orange. Do they not have? You don't have to wear orange in Iowa?
Well, you do, but there's so many deer that and everybody's basically on like a farm or a farmstead or knows somebody with one.
Yeah.
So you just go out to a buddy's place or family member's place and sit by the deer trails and you're good to go. You don't
Yeah.
have to really do much.
Go hiking.
Yeah, no hiking. It's like literally 100 feet off the
So they
road.
call that catching. They don't
Yeah,
call
yeah,
that
Not
hunting.
hunting. That's deer catching.
yeah.
Man,
Some of
I archery hunt for elk. So
okay.
yeah, you think rifle
Hey, this is
is
not a
tough.
hunting podcast, homie.
Hey, it's an introduction, all
We're
right?
going.
It's an
You two can
introduction.
take
That's
your
fine. But it's interesting though.
hunting
I didn't
love.
know that about you. That's interesting.
Yeah, yeah.
But
So
it's
little.
funny that you because you said that and you said you came here and you started to get into investments. I don't know if you can tell us too much, but what is the first company that you dove into? Or let's just say that if you can't release too much information, how did that go?
Yeah, yeah, and for context too, so all the investments I started off in were all private investments, right? So everything that hasn't IPO'd yet isn't on the public market. A few of the companies technically are, or they've been bought by private equity firms now, which is interesting. So there's been some exits in there. Sadly, most of those were during my student career, so none of those came back to us because you don't have carry or any stake in the deal. But as the first investments that we started doing as the fund, it was actually really interesting, and I'd highly encourage every college that's interested in finance or basically venture capital or startups to start a program like this. But essentially, one of my mentors in college, because I was part of the second year that they did it. So it was my sophomore year, and they started it for some of my friends. They joined or were part of the first cohort, and that would have been their like senior, junior year. Long story short, it was good to reminisce. But yeah, I mean, essentially the way that it worked is they had partners, our university did, with all the funds throughout Utah Valley and Utah as a whole. And so a lot of them sat on our investment committee and basically either brought us deals and then kind of gave us feedback on why we would or wouldn't invest on some of those things. So the most important thing I think I learned during that time, and I learned a lot of lessons afterwards, but a good investment is just as good as avoiding the bad ones. I mean, if you look at numbers, actually, losing money is actually worse for you than making money in a lot of ways, right? Because if you lose 50%, if you have $100, lose 50%, you have $50. You have to make 100% on that money to get back that 50% loss. So it really taught me downside mitigation risk, and some of those investments, it really taught me how to look into a specific business and decide, okay, is this business, is this team good? And then what does this market actually look like here in the future, right? Because with venture investing and private equity investing, you really have to look at where things are going rather than just where things are at today. Whereas private equity or growth equity, it's more of like, okay, this is a later stage company. They're printing cash today. How much is that cash worth or future cash flows worth? Whereas the type of investing that I came from wasn't like that at all, right? It was, okay, this company, they made $500,000 this year, but they're spending like $2 million, right? How do they make up for that in the long run? Where do they end? So those are like some of the lessons. Some of the first companies we invested in were a lot of consumer product good companies. We invested in one airline company, which was really cool. That's pretty big in Utah and a few other places now.
Breeze?
That's what I was going to ask. I'm a little
Breeze
curious,
Airline?
like if there was a specific lane that you stay in as far as sending your investments, or if you
Yeah,
just take
yeah.
the
So
opportunity that looks the wisest.
yeah, so with venture funds or even family offices who are investing into earlier stage companies, it depends, right? So for us as a student-led fund, we kind of like take whatever came to us, right? So it was the deals were already vetted. Somebody on our board had already usually made an investment in one of these companies previously, and then they kind of brought it to everybody else, and we got to decide if we wanted to participate or not. Now, when I went and did corporate venture consulting afterwards, it was very specific to clean tech, right? So it was very clean tech focused. Our programs were the 2C2I program, as well as the Amazon Web Services, Sustainable Cities, and Sustainable Energy programs. And we didn't technically direct the investments there. Those were the CVC arms or the corporate venture groups of those those corporations that did it. But we brought in all the leads. We did a lot of the diligence, worked with a lot of the companies. So the process was still very similar, but that was highly specific, right? And so you have generalist funds out there who look at anything and are kind of just like looking for good opportunities. And then you have very specific groups. Think like Craft Ventures is a really large one, right? And David Sachs has his own podcast over there. But for them, they focus on software, right? Mostly B2B software, right? Which is their ultra niche specific focus, and then they don't go outside of that.
Makes sense. I'm curious. I'm sitting here because you had said, and maybe I misinterpreted. You were like, "Hey, a lot of what I'm looking at is like not where you're at today, but like where are things going, right? Like in terms of investment strategies and kind of like shift happens, and the whole theme of what we try to capture is like what's changing in the world of finance, like the markets. You know, like what are you seeing? Is there trends? You know, obviously like crypto was big in the 20s and or early 2020, whatever year that was when the big boom happened. What are you seeing in the finance world, like in investment world, that's changed?
Yeah, that's
What's
a great
changing?
question. I think the finance world's very secular, right? And so you have new trends that come up, like you mentioned, the crypto trend, right? Or different ways of underwriting loans back in 2008 or early 2000s, 2008 that can lead to some issues. And so you have like specific trends that kind of happen in the space, right? You also have secular trends of liquidity in the market. So essentially how much people have, and people usually meaning institutions and families, and how much they're willing to invest, right? So after crypto kind of went a little bit boom, at least because of the NFT craze, and Bitcoin went down to like sub $20,000 after 2021. I think it was like November 2022 that everything dropped, if I remember right. And so after that, right, you kind of had like a dearth of liquidity in the market for about 2 years, 2.5 years, very few IPOs, a lot of SPACs in the public markets that blew up, had to return capital, or went to near zero, right? And so you had a lot of trepidation in the public markets, and private markets really reflect public markets in a lot of ways. There's a lot of liquidity and things are going up in the public markets. People spend more money in the private markets, right? And so those are things to realize. Now, some of the trends that you're running into right now when it comes to financial markets that I'm seeing is one, there's been a lot of liquidity now, a lot of bullish behavior, right? Stock market was up until like 2 weeks ago, and then it started to come back down. And I think that's because most people have kind of started doing their rebalancing of their books in November. That's what I think. Since 2022, that kind of like reset when people start doing tax loss harvesting on stocks. But the more exciting trends, other than just like finance bro stuff, I think what you're seeing in public markets and private markets is really a new underwriting of the Mag 7, right? So Mag 7 meaning that the 7 companies in the public markets that really take up most of the S&P worth, right? There's 7 companies that make up most of it, most of the cap there. And so I think what's happening is with the new technology coming out with AI specifically, as well as compute needed for AI, you have a lot of picks and shovels movements, or essentially all the companies that you need in order to actually run AI products are developing. Some of them are IPOing, some of them are raising a lot of capital in the private markets right now, which we assume is in order to IPO, but of course can't speak on their behalf. And so a lot of these companies are going to be coming assuming AI goes extremely well, becoming really like the new Mag 7. And maybe the Mag 7 expands and it becomes like the Mag 15 or the Mag 20, because you also see these incumbents in the space like Google and other ones that are already doing AI. I mean, Google coined the term LLM, right, over a decade ago. So they were kind of the fathers of that. So a lot of them are still participating in the space, and then you have a lot of other picks and shovels movements that are growing as well to take market share. And so that's one trend. And then there's also like private credit trends and stuff that you've been seeing as well. A lot of people are saying that we're in a private credit bubble right now. a lot of people are leveraged, and I think some of that comes from the sentiment from the some of the banks collapsing a few years back, right? That were over leveraged and stuff, and a lot of them were actually lending to private equity, right? Which is interesting.
Silicon Slopes, was it Silicon Slopes Bank? What was it? Silicon
Silicon
Valley?
Valley Bank. Yeah.
Silicon Valley Bank that had the big problem. They got bailed out. I don't know enough to talk about it, but I read all about it. I
They always
know,
do.
like when you look, because I think, like, first of all, really cool dude. So anybody that does see this, freaking, we love Jaden. Jaden's amazing and freaking awesome to
Sure.
even just talk to. It's weird to talk in a podcast format, like, because it's being recorded. It's like we're all a little bit different, but the like I kind of look at it, right, like because I was in like the tech MSPs, like spec with a special purchase acquisition company, I think is what that is. Um, like, are you seeing any other unique roll ups taking place? Because like I kind of have this hunch that there's going to be roll ups happening in BPOs. I think that's just going to inherently happen with AI. I think you're going to see a roll up. But are you seeing any trends like back in the early, like I want to say right around the COVID timeframe? Tons of MSPs, managed service providers, were getting rolled up. I think I've seen that slow down. But is there any industries that you're kind of seeing that activity in? I'm just more curious.
Yeah, that's a great question. You're seeing some roll-ups. I mean, some have even happened here in Utah of service-based companies. So, this has kind of been like a thesis for I think about the past 7 years that a lot of private equity companies have been doing, but it's essentially buying up like a lot of like HVAC, plumbers, a lot of those services companies. So more of like hard services that probably won't be disrupted by AI or robotics here in the next few years. So that way, they've got guaranteed cash flow and can flip those companies here in the next 2 to 5 years, which is usually what they do to a larger private equity firm. So you have things like that. I do think like call centers and other groups are going to be continuously there's going to be interest for those, right? Because they're cash flow vehicles with high profit margins, considering what's going on. And so I think there's going to be continued interest in those. I do think it'll be interesting to see how AI does affect
Call
call
centers.
centers or other
Yeah.
service providers, right? But I mean, most people,
Yeah.
like, even me, like if I call somebody and I get like a freaking robot voice or something, it just like ticks me off. Or it's like, just select the numbers on your phone. I'm like, just let me talk to somebody. I'm like, I
Yeah.
know what I want, and I know it's not going to be in this like menu of selected items. And until an AI can go ahead and I call it and it can pull up my whole profile and I can give it a voice query and it can actually answer what the problem is instead of telling me, I don't know, come into a branch or like,
Sorry, you're having a hard time. Call again later.
yeah, yeah,
Bye.
or yeah, we have a lot
The
of
hang up.
volume. Yeah, something like that. I don't think AI is advanced enough to be able to handle the job of like call centers, for example, or
See, and
sales agents.
I think, and Preston can even give his take. I truly believe that it's going to be like this shit's coming further than most people. I think it's going to be creepy good, like to an extent. I think a lot of call centers. What this is just like since we Preston and I own a call center, like the inherently you think like what a stupid idea. I actually think what's going to happen. You're going to watch a lot of call centers optimize themselves to death. Like they're going to
Mhm.
go heavy AI and like,
100%.
hey, we're going to like be trailblazers here. But I also see a roll up kind of event happening where I hope we're in a position to actually like go roll up some other call centers because I think you're going to be able to buy some of these people out of like they're going to think they're on a sinking ship and want to eject because they're like uncertain of what AI will do. But I think it'll be a fine balance. But AI is creepy good. Like we took a demo the other day where it was like a Uber driver talking to Eats employee, but the Uber Eats employee was AI. It was like confirming that an order was never received with the driver. They were indistinguishable. Now,
Yeah, it was
that was
pretty
a
creepy.
demo environment, so like whatever. But yeah, I think you'll see a roll up event for sure. And I'm naturally now going into call centers, so I'll just
No, I mean that's a good
stop
point though.
there.
We've seen so many demos because we're in this space, but as an investor, I mean, you probably have people that understand AI, and then there's others that use it for the buzz or the sell, right? And I was actually going to ask you that. Does AI make you more confident in scalability when you're looking at investing, or more skeptical of them overpromising something?
Yeah, it's a great question. So one of the companies I am a part of is called Velvet, right? And we have a product that's like an AI labs essentially, as well as a few other things that. But to stick to the AI side of things, essentially, like our thesis on that was how do we make the diligence, manual review, automation of essentially going from deck to decision easier. And so we mostly use AI for that, right? Some of the tools we use are more traditional tools like deck reading tools and other things. But a lot of the research possibilities can actually come from AI, right? And so it's actually a way that we've said, okay, how can you go ahead and instead of spending an hour in your inbox just reviewing PDFs or PowerPoints and pitch decks, be able to just digest all of those quickly with, like, let's say a few forwards or a few clicks of the button, right? And now you actually have something that's summarized, succinct, and digestible in order for you to make better decisions quicker, right? And so that's something that you see, like we're working on. You also see that happening, and we've seen, kind of like you, with like other call center AI companies talking to you. We've seen a lot of that with other. Some of our clients, right, will be talking to other groups, and the thing is that right now we don't have Gen AI, right? So you have very specified AI that's good at specific things, and so a lot of groups are spinning up like, oh, we do AI for private credit, right? Or we do AI for growth equity opportunities or real estate, right? Because platformatization of AI to be able to handle everything isn't a thing yet. Otherwise, we'd have a $10 trillion company in the publicly traded markets, because they would have cracked the code and they'd be able to do everything, right? So until it can do everything, I think you're going to see a lot of these AI trends with a lot of different point solutions for different segments of the market. And that's actually something we got off on a call earlier with our product team. It's also an emerging trend. Traditionally, over the past like 20 years, you've had a lot of platform plays, right? Like, hey, we're a platform. We cover everything from X to Y. You come on. This is where you do all of your operations. We think that there's going to be a lot more point solutions rather than platforms, right? We go to these few things to do one or two jobs to be done, rather than doing everything on one platform and spending all day on the platform like you used to do with like Salesforce, for example, right?
Yeah. I'm it's kind of curious. I know you do a lot of like B2B, but just to have some fun and like totally switch gears, I have two questions.
Yeah.
Totally, and these are finance related questions, but I think they'll be fun because we talk business a lot. And these are kind of trending
Fun in
topics.
finance.
Yeah, finance.
Only fun time in
What?
finance is when I see the bank account grow.
Yeah.
Yeah.
Finance is not for fun.
Yeah, no, finance is never like, I mean, finance is, that's it. You nailed it. Like, but the spreadsheets, it's that shit'll fry your eyeballs. 50-year mortgages, bro. Because what's your opinion on these? Because you obviously went to school for finance, totally outside of what you do day to day, but 50-year mortgages.
Year.
Good?
Yeah,
Bad?
that's a good question. Okay.
I want the
wanna
no
ask the second
bullshit
question too, or-
version. No bullshit answer. Don't.
Okay, 50-year mortgage. I think every deal, the devil's in the details. I'm gonna go ahead and shut this, so I'll be a little bit darker, but whatever. Okay.
It's like you're angelic.
Yeah, I know, right? It's because I'm getting divine revelation on this right now.
Some
50-year mortgages. Boom.
Yeah, finance. Yeah, so the devil's in the detail. Who's it good for, right?
Yeah.
I don't think it'd be good for everybody. I don't think 30-year mortgages are good for everybody. You can actually cut your 30-year mortgage down to a 20-year mortgage by just making like one more monthly payment a year, right? So it really depends on how you look at any structured financial product. I think 50-year mortgages would be good for somebody who wants to live in one house forever, or who wants to lock in one rate when rates are low. If you can lock in a rate for 50 years when it's extremely low, that's awesome. I think it could be risky for banking institutions, given the way that our economy is currently going with inflation, as well as what interest rates probably need to be in order to combat that. Because if you mark that against the consumer product index, of how much people are actually willing to spend right now, even though the market's going good. It's actually still a little bit cattywampus, right? People are actually still spending less than what they should for how the market's technically going, right? But debt is also basically at an all-time high for the individual consumer. So a lot of people's credit card debt specifically is an all-time high. Buy now, pay later is at an all-time high. And so I think it's interesting if you can bring down your overall payload as an individual consumer. But I also think that's why if 50-year mortgages became mainstream, why they would become a thing is because people are so leveraged, the consumer, in so many different aspects that they need a lower payment over a longer period of time. But you end up paying a lot more money to the bank.
Short-term benefit to the customer,
Right.
long-term benefit to the bank.
Yeah, I think homes are inherently overpriced too right now, but that's
Yeah.
that's
Ridiculously overpriced.
yeah,
Well, it was like,
they're insanely like
It's not even
something that was 400,000 10 years ago is now like just under
my
a million in
goodness.
Yeah.
Utah. I mean, like the multiplication from the last 10 years is insane.
You
Yeah,
could
like
barely buy a shack for 150 grand nowadays.
yeah, the
Yeah,
average first-time home buyer used to be like sub 30, right? It was like 27 to 29. Now the average is like 39 to 41 in the United States as a whole. Like
it's just too
it's gone up
expensive.
over a decade.
I think my kids are going to live at home forever. I'm like, you're
Yeah, I don't know
destined
how a
to.
lot of people live. You know, when you start to calculate the average right income, and then especially if you're single income, then you throw in a house, you throw in a car, you throw in your all your other bills. I just don't understand how most people do it unless you're hustling. So people, you better hustle.
Yeah.
Hustle your ass off. So the other
Oh,
one, the other question, and this one's more like I know my opinion on it, but since you're finance and we've never even talked about it before,
he wants
Swift
to know about your
or
mustache.
Ripple? Like the Swift payment network versus Ripple. We touched on crypto. And my little knowledge of this, right, like is and you can correct me if I'm wrong, but I think kind of the big thing is like if you want to transfer money overseas or even like person to person and Swift, there's kind of a delay there where like the Ripple networks or XRP kind of allows for instant like we're talking seconds, right? For a lesser cost in some cases, especially when you get into higher volumes. That's my understanding. But what is your take on
Yeah.
Swift versus Ripple?
Oh, that's a good question. Again, I think there's two pieces to it, right? What's good for the banks and what's good for the people. Settlement for the people instantly would be great. I think that's why Ripple's garnered so much support from decentralized groups. But Swift is better for banks. And it's better for banks because they get to hold on to your money for longer. They get to arbitrage the overnight lending rate. And then they can also take their time to do whatever they want. And they don't have to implement new systems, right? So I think something like Ripple not being Ripple itself, just because it seems like a lot of a lot of agencies from the U.S. government don't exactly agree with Ripple, and not going to give my opinion on it one way or another. But I think eventually you will see a settlement mechanism close to Ripple employed in the United States and possibly worldwide. I don't think that will happen though until for a while, if I were to crystal ball. And the reason why is because we just barely proposed, I don't remember if it's, I think it's passed, the Genius Act, right? If you're familiar with that. So essentially, if you're looking at the infrastructure of crypto and finance as a whole moving towards more digital currency, the dollar essentially being able to be traded on blockchain, which really just means it's denominated by the US dollar. But that's what the US is working on, right? Because a lot of these stable coins, which were traditionally used for a lot of the on-ramping and off-ramping for trade platforms or settlement for crypto, were located overseas, right? And so the US government was like, hey, Genius Act, actually, we're just going to go ahead and say, in order for you to be readily recognizable as like a US company, you have to have your USDT or USDC backed essentially by a US bank. In other words, cash in the account or verified T-bills, T-notes, T-bonds. So the reason why I bring that up is because I think that's kind of like the first piece of infrastructure that the U.S. government and the Fed is really putting into place in order to possibly launch everything else. I think settlement, though, is closer to the end of that chain rather than the beginning of it. So I think XRP kind of started with the end in mind rather than the beginning of mind. And so I at least don't think the U.S. government would implement that until they've controlled the onboarding.
Yeah. I got like totally hyped up like last year. I'm like, because there's all this talk of like these announcements. I'm like,
Uh-huh.
dude, I'm buying XRP. Like I'm going, and I sat and watched like there was like that specific date, right? Where I'm like, cool, the announcement's gonna be made, this shit's gonna blow up, and I just kept watching it go like dang, dang,
I
Yep.
know,
dang.
same.
Yep.
Like I was just kind of curious because I kind of lived through that moment of, probably not like NFTs were freaking ridiculously expensive, but I just like I think I put like $1,000 in there or something and just watched it like go from like $1,000 to 700, and I was like, wait, this is going the wrong way. What the
It's
heck?
supposed to happen. Yeah, I
Yeah,
mean, I generally think two things. One, if everybody's talking about it, like everybody, it's like on Instagram, it's on TikTok. Your freaking person at Panda Express who's giving you orange chicken is talking about a specific investment. It's probably time to sell. That's my personal
that was a
personal
good
thing.
way to look at it, dude. Because
Yeah.
I got like all hyped up. It was everywhere. I was like, I mean, everywhere I was like reading. I'm like, oh, XRP to the moon, baby, let's
Right.
go.
Mm.
Right. Yeah.
I'm spending my fortune in my head. I'm like, okay, I got this many coins. If it hits here, like I was totally bought in. I mean, obviously
Yep.
not like totally bought in, but I thought for sure like this is going to turn into something. And so I was kind of curious because I just lived through that a little bit and learned.
Yeah.
But I
I
like
think.
that line of thinking. Like if everybody's
Yeah.
talking about it, it's time to sell because I guess all the best investments happen kind of quietly, and there's the select few that really like make it. Like Nvidia, I think a stock that went up like massive amounts,
Insane. Yeah.
especially with AI. So damn, I wish I would have bought Nvidia stock.
Yeah. I should have taken my mom's advice 3 years ago.
Did she tell you about it?
Yeah, she was like, because I knew about Nvidia, but she was like, you should buy some Nvidia. It's going up, and I'm like, if my mom's telling me about it, then I should probably sell my Nvidia. But completely wrong.
Sorry, mom.
Yeah, sorry, mom.
Yeah,
Anyways,
no, when I first heard about cryptocurrency, I was like, you're kidding me, man. I'm not going to put money. He's like, this one of my employees, he's like, I promise, put $1,000 in it. This is before it skyrocketed. I'm like, I don't even know what it is. Why would I do that? I look back to that grade and they regret it like crazy.
yeah, dude,
Yeah.
I feel that, and
Makes me sick.
my senior year of high school, like 2014, I wrote a paper on Bitcoin, and then didn't buy any.
All
Yeah.
the benefits of it, you're like, these
Back
are
when
the
it was like
benefits.
$700,
Yeah,
like it was
That's
cheap.
wild.
I guess
yeah,
what that had been like what 10 years ago, 11 years ago. Yeah, it was pretty cheap, dude. Bitcoin, I like if I could go back in time, I would have not had a 401k during our time when Preston and I'd have just been putting like $5 a week into Bitcoin, and we'd be billionaires.
but yeah,
Oh my
oh yeah.
gosh.
Like
Yeah.
if I could go back to 2008 instead of being in like
Yeah,
elementary school, just buying real estate and Bitcoin, things would.
right. Dang, the things now. I wonder what that's going to be in 15 years from now. Like, what's
Yeah,
that? What's
that's
going to be the I wish moment? Is there anything that's bubbling that's like really controversial that you're like, this could be great? Or,
yeah. I mean, I think cryptocurrencies are still up there, right? So I mean, I honestly think like Bitcoin, of course, isn't a good of opportunity now as it like used to be, at least for like get rich quick. I think it's still going to be because you have institutional like capitulation. Institutions are in on it, so now it's in my mind because they're backing it and it's a part of their portfolio. It could be considered a too big to fail prospect, which so I'm still pretty bullish on that. I think anything in the AI space, not everything in the AI space is going to go well, but AI itself has so much money behind it from governments, from large institutions, everything else, that I would definitely look into. If you're not a super sophisticated investor and you're not in the private markets, I would look into publicly traded AI companies because I'm pretty bullish on that. I mean, if you just see like Google, right, how much they've gone up since April, right? And a lot of that's because of their AI announcements as well as maintaining their profit margins. I think they've 2x'd, right, since April, which is good. So like even like companies like that are still pretty good opportunities in my mind. People who are participating in that space. I'd say the bubble is people or large groups, publicly traded companies that aren't. I've always had an Android, and this isn't to like hate on Apple. I always had an Android up until like a year ago. And then like my phone was like dying. It's like, it's time to get a new phone. Everybody's like, get an iPhone, get an iPhone, get an iPhone. So I did. First one, yep. And then
Android.
now everybody's like, iPhone isn't doing that great. And if you look at any of the interviews with the execs, and they're like, hey, so what's your AI strategy? And they're like, yeah, we don't really have one. And then they're like, okay, are you coming out with like a robotics strategy or like a strategy along like different devices that could support AI products? And they're like, no, it's always going to be the phone, right? I think that is I think basically comments like that are kind of a show of like, okay, groups that are not betting on platforms or technology of the future might have had their like heyday, right? And I'm using Apple as an example, not to pick on Apple, but any company that's kind of doing something similar, right? I think it applies to call centers too. I think anybody who's in the call center space, or even like trucking, and I can talk about that for a second, but aren't looking at technologies of the future and at least trying to understand and implement them today, will be left behind. And those are the ones that you were talking about, right? Of like, oh, maybe we could roll these up, right? Because
Yeah, the ones that are just kind of putting it out of their head, like we don't want any part to do with it. They're gonna get left behind. You'd have to figure out and not even think it's gonna take us over, but how the heck do we implement it the smartest way possible? How do
yeah,
we utilize the tool, just like you utilize any tool?
hmm
That's like to say that you are going to continue using paper instead of, electronic communication or,
yeah,
the world
Paper.
evolves. You have to evolve with it. And AI right now, it's a part of it. It's a
yep.
big
Oh,
part of it.
100%. Like a funny thing when like the new telling system came out, right? Bank tellers were ticked because they weren't doing things by like paper and doing like one-on-ones anymore. So like telling systems came out for banks. There's more bankers today than there ever was, 80 years ago, back before that was the case. Technology's really helped groups scale. Of course, there is going to end up being like attrition in specific working populations while they do scale, but there's going to be another job that if they understand, they could go and get that job instead, right? So I think it applies on the individual level as well. Anybody who's working in a specific job should see how like AI could benefit them, or other technologies could benefit them. So that way, if the opportunity comes, they can either implement it or learn it in order to apply it to themselves in the future.
Now, the one that you just brought up, let's get trucking. I don't
Yeah,
like I my opinion is if you're a truck driver, uh-oh. Like I
Yeah.
don't see like maybe ice road truckers, but I got like AI, man. There's going to be a robot that can navigate that with like the only risk is the cost of the equipment, not the human life, right? Like I don't know, bro. What's your take on? I mean, call centers. I think like I get Preston and I could geek out on that like all freaking day, but like what's your take on truckers? Am I wrong?
yeah, yeah. No, I think in the next, I'm not going to crystal ball it, but in the not too far future, I think you're going to see a large attrition in like manual truck driving. I'd even say like, just like car handling services, even like Uber and other things. I mean, you've got like Waymo and other groups that are already doing fully autonomous drop-offs, right, for consumers. So,
Be so
um,
creepy.
yeah,
All
I mean,
right.
it's kind of,
That's
I like
fire.
it. It's kind of fun. Like nobody who actually enjoys driving places. So
That
I go to,
awkward silence though with the
yeah,
Uber driver, right? Instead of
or they're
that,
playing large music, or like one of my friends, she like filed a lawsuit against like an Uber driver. I don't know if it was like Uber driver, like which one of the services, because they were like she was getting a ride. It was here in Utah, getting a ride, and this dude pops out a bottle of vodka and starts drinking middle of the day while driving on the job, like insane. So
Driver.
yeah, so literally he just
That's
became a drunk
great.
driver. But anyways, I think so. I think for one, automation of trucking as well as automation of either delivery services. I think for delivery, you're going to see like the last mile completely change, right? You've got like robots who do last mile delivery. You've got drone services that are doing it now. And I think for consumers being taken places, like I think people are eventually going to want to just have robotic cars take them places. I think that's the bets that like Uber and other groups are taking too. And I think they're also going to be taking that same bet for long haul, right? A lot of long haul and other things can be very well automated with
You know,
good delivery
AI
systems.
doesn't need to sleep. Like
Yep,
literally
doesn't need to
just
sleep.
24 hours. Like, I mean, I charging, I guess, is the stop to charge, but still got to stop for gas now. That one's interesting. It's
Yeah,
like
I was
really
thinking about that
interesting
too.
because it's not a high touch personal thing. It's point A, point B.
And there's a lot of money in the space, right? So I think that's what you're going to see. There's already been talks of like a lot of the larger companies, so like Ubers and other groups that have basically talked about standing up automatic fleets, so self-driving fleets. I think most of that's pertaining specifically to consumer first. I would definitely think that it would end up being in trucking in general as well. I think the problem is that also ends up affecting financing groups, debt financing groups in the space as well, right? Which is something I'm in on. But it's like if you guys aren't looking at creating autonomous fleets with your current fleets and thinking of interesting finance models for those autonomous fleets moving forward, like your business might die as well.
What's your timeline? I'm not going to let you off the hook. Crystal ball it. Now,
Well, that's
obviously, this comes with the caveat of this
yeah,
is just a guess.
yeah.
But
I
seriously, how
mean,
far? Because you do it. You sounds like you deal with a little bit of like the logistics and like truck driving as a touch
yeah.
of
So
that. What's
when I started off the private credit fund, it worked specifically with truck drivers and oil and gas, right? So that's why I spent quite a bit of time in it. Yeah, I mean, I think honestly, I'm putting most things right now on like a 7 to 15 year time horizon for things such as like smarter AI, Gen AI that can do a lot of the stuff that we're thinking that it can do today. I think we're like 7 to 15 years off on that. I think for autonomous trucking, you have to have that AI infrastructure there for it to be able to work well, which are currently being built out by groups like Tesla and other groups that are self-driving. So I mean, yeah, I mean, I think a lot of things in the world are going to be changed here in the next 7 to 10 years. A lot quicker in the next 7 to 10 years than's happened in the past seven. I'd say. I mean, last 10 years actually a lot of changes happened, but I'd say the next 7 to 10 years are going to be crazy.
Yeah, 100%. 10 years from now, we're gonna look back and look at this podcast.
will be
It's
VR.
insane. If
We'll
you look
all be
10
in a
years
room
back
together.
from today's day, it's already insane what's changed. 20 years, 30 years, and now we're implementing the ability for AI to take hold.
I say bring it on.
Yeah,
Bring
I'm
it
for it.
on. I think it's going to be interesting, but like in our space in particular, I'm like, bring it on. Bring it on. Like I think like what we talk about, I think it's a unique opportunity. It's like the .com boom, like that we were all too young for. Um, I don't even know Jaden if you were born yet in the .com boom, but
I was
we
I was alive
yeah
barely.
we were because yeah I like we were all young enough that we couldn't participate. But I think that's kind of what is going on. I'm like, bring it on, baby. Like this is where you know uh, you have opportunities to stand out. I think the finance in particular, and some of the shit that you do, that I think you're doing some creative stuff and like kind of your views on it. Obviously, we know all three of us know each other outside of this, but I think you've got some interesting takes on that. So, trying
I
to
know
think of
we're
some other
gonna.
creative shit to ask you. Do we have rapid fire
Well,
too?
yeah, I know we're running close here, but I do have one question. I was gonna ask a little bit earlier. If you could fix or recommend one thing founders like us to talk to investors or to get investors, what would it be?
Yeah. Depends on who you're talking to and what industry. And everything I say is
Yeah.
depends, and
Yeah,
I'm sorry.
Yeah, yeah, that's all
like,
it has a
that's
caveat
yeah,
to
it's like
it.
Well,
50-year
like,
mortgages.
yeah,
Depends.
You don't get any
depends.
depends on rapid fire round.
Yeah,
Yeah.
yeah. Okay, no depends on rapid fire. I just have such a hard time thinking like black and white. So I think you can always make I think you can always make lemonade out of lemons as long as you do
Yeah,
things
for
right and
sure.
structure it right. I think the best way for startups to be able to talk to investors better, and we'll stick with like earlier stage, right? So like you're a growing company. Basically, most investors at that point, it's a numbers game, or if you're going to mass investors, or you need to know a few people really well, and they need to know your character. They need to know that you know what you're talking about, and they need to know that you have a vision. And it's okay to admit that you might not know stuff, but that you're willing to learn it and grow it,
Figure it
right?
out. Yeah.
Yeah, because all of my first investors, because really starting like any kind of fund, like my private credit fund, for example, my first investor is still my largest investor. And that family office group was just like, hey, I like what you're talking about. I know you've done it with your own money. You've shown us results. Like, I'm taking a bet on you, right? And that's what most investors are really doing until you start printing a considerable amount of cash. They're taking a bet on you because really the biggest thing that people are looking for is people know markets change. They can try to crystal ball. I think anybody who says that they can crystal ball past 3 years is like up in the night. I think it's past 3 years. It's like your guess probably it might be accurate, but it goes down in accuracy, right? But like if you know that the person that you are partnering with or investing in can navigate those changes or will do their best to navigate those changes, you know that they're a quality person and they're not going to give up. Then you know you're making a good bet, right? Because no matter how good the tech is or other things, if somebody you're working with is an asshole or they're just in it for the short term, it's not a good long term bet. You don't know where things are going to go, right?
Yeah.
And so
I
being
was
able
going to
to,
ask you earlier, what do you look at, person or process? So you kind of answered it. I mean,
yeah,
and it
yeah,
depends, of course, like you said.
yeah. It depends. It depends. It depends. Um, that's we should change the title of this episode too. It depends. Um,
That's gonna be that we'll throw it on YouTube.
Not,
That'll be
not,
the
not the
headline.
depends that,
The diapers.
we'll be using in 20, 30 years from now.
20, 30, 20 years, bro. I hope not. Shit. That's not.
You're thinking like 10?
No, no. I'm thinking like a long time, 50, 60 years. If I ever need to wear Depends, I hope I'm like 100 years old.
Yeah, no, for
I
sure.
honestly, I'm going to ask, like, and you don't have to answer this, but I think one thing I see all the time, and we're obviously like Sonic's a startup, but like investors can destroy companies. Like, and I mean, like, you have a really solid company. Like, I see, like, congratulations on such and such company for raising Series A, 3, 5, $10 million, right? And all I can help but think is like, Lord, like, like you see good companies, bro. What is it? How much of that, like, I think I have my own perspective, right? Like, I think founders become beholden to the investors. Like, it becomes justify everything on paper, optimize the shit out of your P&L, and it kind of destroys cultures. What is your take? And I know you're like, you live on the other side of the table, right? Like, I just see far too many companies taking on investment that just kills their culture. Like, and I don't know if there's a question in there, but like, have you seen that? And are you like what's your take on that? Because I can go on for days. I'm always like, that's not congratulations. That's like, holy shit, good luck, bro.
Yeah, and I think back to my earlier point, an investor you have to sell an investor on yourself, but an investor should also be aligned with whatever it is that you're doing, right? Because they become a partner, they're an equity partner in the company, and as soon as you take on investment or debt, you're now beholden to somebody else, right? If it's equity, you now feel a responsibility to that person. You now have shareholders. You have to do a fiduciary responsibility. And like you said, if it's the wrong partner, it can really end up affecting your company because they can either be like, hey, man, we gave you X amount of money, right? You have to do what we say, or, you traded too many board seats on the company or too much control on the company for that money, and now you're beholden to that person. Or in debt, right? Some people, and this is why people think we're in a bubble right now for private credit, but people will take on more debt than what it is that they can actually be able to produce with their company. And, if you can't meet those requirements, now your whole company's at risk, right?
The investor will
Um,
just boot your ass. Be like,
right. The,
bring
the
in somebody
perks
new.
Yeah, the perks with equity versus debt on that is in debt, everybody just wants their return. Otherwise, they'll eat you, right? They'll sue you, take your collateral, whatever. They're just looking for return. In equity, if it's the right partner, they should be like, hey, now I know I'm making a bet, and I'm betting on the long run. And so then it's really finding the right equity partner to bring in. Because I know some groups who are like, hey, I'm raising money, a substantial amount of money, tens of millions of dollars, and they've had term sheets on the table, and they've turned all of them down because they're like, no, you guys want control of the company, you guys want these things, and we're not willing to give that because we don't want to sacrifice the company, right?
Yeah.
And so I think the number one thing is when you are looking for money, you should be looking for money before you need it. Then
That's
you
a good
have
way. And look for the right partner. Even as the entrepreneur, like I think like looking at money before you need it, like finding somebody that you're like, hey, this is a good human. Like we totally like cool. Every win-win, like the trust is established. I think it makes it flow smoother. But the only reason I wanted to ask that mostly like because I think it'd make for like a good kind of like when you're younger specifically like you see that right like I know when I first kind of like got in the business world and I saw these raising rounds like I think a lot of people attach like especially when you just don't know what you don't know you're like damn they're successful or damn like there's all that excitement but I think far too many people don't understand like on the back end what that means for the business what that can mean sometimes for the culture and so like if you're any young entrepreneur out there like kind of wanted to just talk caution like raising money sometimes actually is worse than being a W-2 employee if you
yeah.
raise it with the wrong group.
I mean, I think the best thing to do is just like follow Google's example when they started. They only did an A round and then they never raised money again.
Lord, whoever got involved in that A round.
Right. And I could be misspeaking, but this is according to the autobiography that I listened to the other day on the company. But it's like cash flow as much as possible. Because if you cash flow, you have control. You know that your company's alive, and you're not focused on essentially like, oh, what do I need to do to raise more money to keep my company alive? Default alive by having cash flow is the best business model. And I personally don't currently get involved with companies unless it is on like the private equity side, investing side, with companies that don't produce cash flow and can't be default alive, right? Because
Good
I'm
way
I'm
to
trying to look out
view
for
it.
the long term.
I think we need to create T-shirts like Finance Bro, Staying Alive
Staying alive,
T-shirts. Now you're going in my caller ID now as Finance Bro.
dude.
Preston
I'll take
Finance,
it.
bro.
I'll take
made it
it.
official. I loved the opening Finance Bro, but actually kind of I think the part Preston gets the funnest part of the whole freaking thing, which is the rapid fire
This part. All
where
right,
you
Jaden.
just have
So
to answer
no
shit nonstop.
no overthinking, just
Okay,
instincts.
I'm ready.
It's this or that or quick answers. So let's see where your brain really shifts. Build or buy?
A build
Growth or profitability?
profitability.
What's the red flag you spot fastest in a pitch deck?
Um, that one's a hard one. Just lack of business plan. Like, what are you doing with my money? What are you doing as a business? Right? Lack of overall business plan and understanding of the market.
Something that AI threw together, basically.
Yeah, yeah, right. A
M
lot of a lot of
dashes.
founders would be like, I've got an idea. I'm going to go ahead and raise money for it, and it's like, how are you going to execute this idea? Because
Yeah. Okay.
everybody's an ideas person. Sorry,
Yeah, for
continue with your
sure.
rapid fire.
Yeah. No execution. I like it. What's the one tool you can't live without today?
Uh, email, my phone. Actually, my phone. Yes.
That's a good one. I didn't even think of that. I was thinking AI around, but for sure. Would you let AI run your portfolio for a day, let's say? No, not even for a day. You wouldn't give it a shot? See what it could do? part of a portfolio?
Yeah, you'd have to like take a kit like a little chunk and throw it in there. Yeah,
10%.
not the whole
Let's see what you
thing.
could do with this 10%.
For a day, as long as the AI decides not to sell anything.
Yeah. Pro- Profits only. All
Yeah.
right. I was going to end this here on the best piece of advice you've ever gotten.
Best piece of advice I've ever gotten. Probably just work with people you like. Work with people you like. Life is too short. I got that when I was like 23. Somebody in my family was like, "Yep, you're gonna have to work with people you don't like." And then the only two things I really got from college was one, the fund. Two, well, I guess three things. That advice from one of my professors, and that same professor was like, I think it kind of goes together. Work with people you like, and then only like do things that you like to do, because life's too short not to. Also, if you're doing something that you don't like to do to make money, it's not going to be sustainable. So as a founder, you only want to be founding companies that you like what you do.
Yeah. And I mean, it's not that I'm in love with contact centers, but that's what I'm good at. And I'm good with people. I love dealing with people. So
Yeah.
I,
You don't hate
I
it.
love
it falls in
tinkering
line.
with
Like
shit.
I wouldn't have had the opportunity to meet you, Jaden. I think you're cool shit.
Thanks,
So,
Tom.
but appreciate you joining Shift Happens with us, episode 4 or 5. Eventually maybe we'll tick them down, but
Yeah, I think it is actually. This is the fourth one, so we've got you're number 4.
Awesome.
Yeah,
Well, I'm honored to be on.
and
Honored to be number 4.
yeah, number 4. We'll get up to 100, and then it'll be
yeah.
like you were one of the OGs.
Yeah,
Yeah,
we
there we go.
appreciate it. We'll have you back on too, and when we have it a little bit more
When we
streamlined.
launch, it depends.
Yeah.
Just kidding.
Depends.
All
But
right.
until next time, keep it real, keep it measurable. Remember, y'all, revenue lives here.